Now let's get into the advisory now. Many people sometimes lost as how they can capitalise on investing in their superannuation or investment portfolio. To provide some clarity on this matter and various different approaches, Roger Perrett from Freshwater Wealth joining me on set. Great to see you, Roger.
Likewise, thank you.
So how should people be positioning this? I mean, superannuation is arguably, especially if you don't have a mortgage or a home, your biggest asset.
No, that's right. And look, there's probably a couple of approaches online. There's a few tools that people can go and use themselves to try and work out how to invest their superannuation or their investment portfolio. But being an advisor, there's just so much evidence to say it's really a great benefit to use an advisor. Just taking the emotion away when there's times of volatility. Also just tailoring the portfolio to the individual specific situation. So two choices, but I highly recommend going down the advice route.
And so is that in terms of building then somebody's SMSF, or are you just looking as well at comparing like super industry funds?
Yeah, that's both. Yeah, that's right. So generally the self-managed super fund and an ordinary portfolio, we can do exactly the same thing if we're using investments that are listed on a platform and things like that. But we generally start off always, in terms of a client's risk profile. There's tools to be able to do that, but we generally like to have a conversation to really understand how people are going to behave when market corrections, and also when markets rally, how they're going to react.
And so in that sense, what are you I know you can't give actual advice, but what are you talking about in terms of diversifying and making sure, I guess it depends on your age, how much risk you have too?
Yeah, that's right. Yeah, so it's I guess the first step is, once we've done the risk profile, or really understanding what sort of performance versus volatility people are happy to withstand, is aligning that to a certain portfolio. Now, high level, that could be like 70-30, meaning 70% in growth assets and 30% defensive, or 50-50, whatever it may be. But that is sort of the main driver in terms of that performance versus volatility outcome. But then there's another layer down, like within that 70%, how much do we do Australian shares and how much do we do international and property per se. So, and that's like a really key determinant in terms of the client's overall performance.
Do you use any of those modelling things that you can find easily online about where you should sit in regards to whether you're a man or a woman, what age, or do you look more closely at each individual?
No, I think it's best to look at the individual, and it's really how they're going to cope with the volatility. So, and then the second thing is their time frame. So if they understand that markets are going to be volatile and they'll stay firm, if you like, and they've got a long-term time frame, I feel far more confident to recommend more aggressive portfolio, if you like, compared to people who are a little bit wary and cautious and maybe with a shorter term time frame.
How often should people be regularly reviewing their portfolios here?
Yeah, that's right. Like at the moment, let's just say we have an asset allocation for Australian shares, call it 30%. If Australian shares do better compared to the other asset classes, that 30% may grow in proportion from, say, 30 to 35%. And in that case, the portfolio is getting generally more aggressive. So when we basically invest aligned to that target, or that 30%, naturally as the portfolio grows or that allocation grows, we sell. And then likewise, if there's a correction and that allocation isn't 30% anymore, it's only 25%, we buy. So those type of adjustments, I think, should be done on a fairly regular basis. So the portfolio doesn't drift. We stay pretty close to that strategic asset allocation.
So what you're doing at Freshwater is really advising here people on how to best manage the portfolio they have. What do you say though about people trying to boost their own retirement by the likes of salary sacrifice, or trying to meet that tax cap as well?
Yeah, that's right. Yeah, so I guess we've spoken about today just about the investing side of things, but there's far more levers to use. And when you see an advisor, it's not just about the portfolio, it's all about those other things, how to contribute, how to get further tax savings, how to potentially reduce your debt or minimise the taxation effect of debt, etc. So yeah, there's a whole raft of things that we can do when people come to see us.
And more broadly, what are you seeing in terms of the overall macro environment? We've had one interest rate cut, I think, since we last spoke. How are things out there in terms of, people's appetite for risk, I guess?
Yeah, that's right. I think over the last 15 months, people have been very happy. There hasn't been too many negative stories, and their performance has been fantastic. Obviously, the last few weeks, it's been far more volatile, and probably especially today. But I just keep on bringing back to people's overall objective, and it's not about what's happening today or tomorrow or next week. It is really about the long term, and we're very confident. Especially looking back in history, if people have the right risk profile and the right time frame, and they stay strong during these times of volatility, that's the main story, and they'll be well positioned.